What's going on, guys? Welcome to another video. In this one I wanted to focus on some earnings coming up specifically for small caps. Now, as you may know, we do have CleanSpark reporting tomorrow and I will be covering it, but let's just get right into this video. Don't forget to like, subscribe, hit the notification bell. It helps me out greatly. Consider checking out the links down below to some stocks and cryptos. Consider joining my YouTube membership. It's like $2. And let's get into this one. Now, first off, as I mentioned, CleanSpark is reporting tomorrow as of this upload. It's going to be February 9th on Thursday. And if you're curious about my thoughts on this earnings coming up, I will give you guys my last video that kind of goes more deep into CleanSpark's earnings, but we've got a lot to talk about here with some other stocks as well. So if you're interested in CleanSpark, check out my last video. I'll leave it down below or I'll leave it on the end screen for you. Now, also another one that's reporting earnings, another stock that I have high conviction in is Indie Semiconductors. And they're actually going to report their quarterly results on February 16. And I did want to pull up the chart for this one. And you'll see that, we've been in this just kind of chopping area, this just sideways action, I'd say, ever since roughly January of 2022 of January. So to me, it's very surprising that as many stocks throughout all of 2022 have just, declined a lot, dropped a lot. Indie has been relatively sideways, has kind of maintained itself. And one thing you will see here is that this is another stock. If you guys are familiar with my channel, you know that I've mentioned May 11 or May 12 as the low. And this is another case of that with Indie. Indie did not break its May 11 low. Now we're looking at almost a year, just a couple months away from a year, that Indie hasn't created a new low. That's a very good thing to see. And in a second here, I'll bring up another stock that has created a new low since May, but it to me is another high conviction stock. But just sticking to Indie really quick, you'll see that it's just kind of been in this chopping pattern. We did find a resistance right around $9 again. It did have a breakout, but it was a false breakout. We didn't get a candle to close above the resistance. And it looked like we were about to attempt this again and try to break out of this 9, but we just weren't having it. Now, Indie's about to report its earnings, as I mentioned, and they are expecting another record-breaking quarter in revenue. Still not profitable, but they will be talking about when they expect profitability. We'll see if they push that out or actually bring it in closer in time. But there's another high conviction stock for me. I definitely believe in it. We have a killer executive team. I've covered this one before in more depth, but just know that this is a company in the cutting edge of ADAS, or advanced driving assistance systems. They've also made a lot of wise acquisitions with companies that do things like LiDAR, radar, things of that nature, and just basically everything revolving around auto tech. But I do think that this will likely pull back coming up to earnings. There might be a little bit of uncertainty. If earnings comes out bad, you're going to definitely want to watch this May 11 low level. Hopefully we do not break it again. I would not like to see that. If earnings comes out good, look for a breakout of $9. In terms of investing in Indie, what I actually have been doing is I've been getting warrants on Indie because it's a lower initial investment. It is a little higher risk than just buying shares outright, but I think for Indie, warrants are the way to go because it's a lower initial investment. Like I said, you can get each warrant for like $1.50 to $2. And then basically what that warrant gives you is the chance to execute it and then buy a share of Indie for $11.50. Now you might be asking, why would you want to buy a share of Indie for $11.50 at this current price? Of course you wouldn't. But the thing with these warrants is they expire in 2026. So if you believe by 2026, Indie will be drastically over $11.50 per share, just like I do, I definitely believe Indie will be much over $11.50 a share. I think warrants are the way to go because, like I said, it's less money that you need to put in. You can literally buy like 4 to 5 warrants for the price of one Indie share. And I just kind of see it as a better opportunity to invest in Indie with warrants. I do have shares as well. My focus throughout most of last year was buying warrants. But let me know your strategy for Indie down below. Next up, I did want to mention ChargePoint stock, or Chpt. This is my picks and shovel play for the EV industry. I definitely have some higher risk EV stocks, but to me, ChargePoint is a no-brainer. They are expecting earnings on March 1st, so not too long from now. And looking at the chart, this one unfortunately did break its May 11 low, but it was only like for a day or two and then it just started blasting back up. Now on the short term, you're going to want to watch this pattern. We have been in a general uptrend and we may likely break it as we approach closer to earnings and we get a little bit of uncertainty here. But one thing you'll notice is their revenue has been ballooning on this company, and I've showed you guys before just how much revenue growth they have. Feel free to pause the screen so you can just see these different earnings that they reported and just how much they've grown over time. If you're familiar with this channel, I've talked about this one from the start, and I was even in this back when it was during the SPAC days when it was SBE or Switchback Energy. Now, one great thing about ChargePoint, the CEO has been around with this one since the beginning, or since around the beginning at least, and he definitely believes in this stock for the long term, believes in the company for the long term. And the earnings call is going to be very important, not just to see what the numbers are, but to see when they expect profitability, because this is another one that's not profitable. Big surprise. But I do believe in this one for the long term, and they're in a huge growing industry. And as you've seen, that revenue just keeps ballooning, and there will be a point where that revenue surpasses how much their expenses are and they become profitable. I do expect this by potentially the end of 2023 or early 2024, but we will see what they say on the call. But ChargePoint for me is a no-brainer. Even as this pushes up, I still see it as a buy all the way up to around $20. And next up, I wanted to mention a Bngo, or a Bionanogenomics stock. Now, I did cover this in a video yesterday, so I'll leave that down below for you. But they're expecting earnings on March 7, and there's actually a lot of small caps that I talk about that are reporting earnings on March 7. Bngo being one of them. And I don't want to sound too repetitive, but it is important to watch the patterns on Bngo, because I mean, this thing really loves to trade patterns. Everyone that watches this knows that. Everyone that plays this one lets those patterns play out typically. And we did just see a break of this pattern. We'll see where it goes from here. But Bngo is definitely one to watch. It's a very small cap, definitely high risk. But what we've seen here with this one, as well as ChargePoint, as well as a few others, is consistent growing revenue. And the medical community seem to be taking Bngo very positively. Their OGM, or optical genome mapping device, seems to be an absolute game changer. And there's actually doctors and medical institutions that give a lot of praise to Bngo's OGM. It seems to be a more efficient, more productive way of genetic mapping, of reading genetic data, compared to older traditional methods like karyotyping and FISH. And another one reporting earnings on March 7 is going to be Sensionics. I haven't covered this one in a little bit. There really hasn't been all that much news going around for this one. But to me, this is another game changer stock. This is in the medical community, and they do have a CGM, continuous glucose monitoring device. And right now they have FDA approval for their 180-day product. Correct me if I'm wrong, I believe it's the 180-day one. But they are currently in the works of a full year CGM. And the thing with this one is really just getting more kind of user adoption. This is still not a very well-known product, but since they got FDA approval, and since there's insurance companies now willing to cover their product, I do think we're going to see more and more mass adoption for Sensionics. And in this earnings coming up, they are expecting a record-breaking quarter in terms of revenue, not profitable. And as a side note, guys, if you have all your portfolio in just small caps, you might want to hold off on some of these. You don't want your portfolio to be nothing but, risky small caps. I know it's definitely my main focus on this channel, but I definitely believe in a lot of large cap safer stocks as well, such as Amazon, Nvidia, AMD, Meta. I've talked about these throughout the year on different videos. It's definitely not the main focus of my channel. I'm definitely more into talking about small caps. They seem more interesting to me. They're definitely more high risk, high reward, but just be aware of that. You don't want to just go all in on all small caps. You want a very diversified portfolio. You want some dividends. You want some growth. Maybe even you want some bonds. But it's definitely encouraging to see that, Sensionics has seen relatively, consistent revenue growth with a couple of lapses along the way, but in general, pretty consistent revenue growth. And it's going to definitely be important that you tune into their earnings call. And one thing I wanted to bring up on the chart here is you'll see that we've been in this very sideways action with a little pop along the way, but in general speaking, Sensionics has been extremely sideways, and the only time before that it was this sideways was before its huge exponential run in 2021 and 2020. And you'll see just how much sideways action we had here. This is called an accumulation phase, and I do think we've been in somewhat of an accumulation phase here as well. I personally think as the macroeconomy improves, as Sensionics continues to prove themselves, continues to get more user adoption, and continues to see revenue growth, this is going to absolutely balloon when we get back in that risk on market. And finally, I did want to mention Workhorse. They are reporting earnings as well on March 7. A lot of earnings coming out on March 7. Definitely going to be a busy day for me. But this is another one that's going to be really important to listen to their earnings call. They really don't give all that many updates. I did cover their last update. I'll try to give you a link down below for my last Workhorse update. It's going to be very important that you not only see what the numbers are for their earnings, but more importantly, actually see what the Q&A gives you, see what the statements are from the CEO, Rick Dock, and just kind of news on how their stables and stalls is going, news on how their aerospace or drones are going, how their partnership is with Green Power, and are they actually getting these vehicles off the assembly line. As those of you that watched my last video know that they are discontinuing their C1000s, and this was the previous Workhorse under different management. And it seems like new management scrapped those because there were just too many issues. So now we have a couple different vehicles that we're dealing with partnerships with this green power. So we'll get some color there in their earnings. Going to be very important to tune into that earnings as well. And one thing with Workhorse, you know, they really don't give very many updates. Our last update was somewhere around a month ago, and I would like to see more than that. I would like a little more updates. I would like a little more news on Workhorse, you know, some kind of a social media presence. But this is going to be another important one to watch. Like I said, you know, the Q&A is where you're going to get all those valuable little tidbits of information. So you're definitely going to want to tune into Workhorse's earnings, as well as a lot of these small caps. You know, there's sometimes some valuable gems of information that you can find in the Q&A and just, you know, in bits and pieces of the earnings call itself. But thanks for watching, guys. How are you feeling about these stocks coming up into earnings, and are there any that I missed that I should cover? Thanks so much for watching. Hope you guys got something useful out of this video. Watch out for all these earnings. It's going to be a very busy month, and of course the beginning of March will be very busy as well. But thanks as always, guys, and have a good day.